I'm recording now. Yo, yo, yo. I'm actually doing this live on YouTube as well. So make sure you subscribe and hit notifications, turn notifications on if you want to be involved in the live streams and watch me chart this out. Yeah, so basically I want to talk about what I see going on for AMC as far as upside and what that looks like. I know that I'm coming from a technical perspective, which isn't necessarily like the most popular with like everybody in the community because a lot of people think that it's not a technical play at all. So I do want to talk about that as well, just to start off. If you're not interested in technical analysis on the play, then I don't know if my channel is the right channel for you, honestly, because I think that technicals are one of the biggest parts of this play. And the reason that I believe that is I believe that if there is algorithmic trading, if there is this large short position that's off the books, everything like that, the stock is behaving in this manner in order to create an emotional response from the people who are involved in the stock. And so being able to analyze the technicals of it will help us have a better understanding of what's going on when it's going on. And just to show you how effective technicals have been so far, we can do, and I've done this in a few videos now, but we can do a trend-based fib extension from the bottom to the top of the move in January, and then back to the bottom after that January run that we saw. And it actually predicted the top with the 3.618 fib extension level at $72.77. And also, you can see that the $54 level was a key trading zone. The $35 level was where this bounce occurred. We broke down underneath it, and then we found support back at this trend line. I think that it's pretty clear that this is a technical play in a lot of ways. Whether it's completely a technical play or not is a different thing. But yeah, so based on that trend, right? If we just use that information that we just did, the trend base Fibonacci extension, and then we went down to the bottom here that we've received here around this $29 level, we would be able to see the extension range, the potential extensions that you could see if we did get an explosive move up, a breakout to the upside. The last run up got us up to the 3.618. The run up in June got us to the 3.618. So this would be the $250 level right around here per share. I will say that overall, I do expect if we continue in this channel that we've been in, I do expect some sort of diminishing returns at some point when it comes to like what these explosive moves actually end up looking like, until something else changes, like a MOAS type scenario, right? And I'll talk about what that looks like as well. But for now, until something changes, the reality is the top of these moves has respected this channel thus far, and the bottom has respected this bottom part of the channel as well. And you can also chart like this and say, okay, whenever we're underneath this line, we have a historically good buying zone this year, right? And this isn't me saying I'm selling anything, but what I'm saying is this region thus far has been the peak selling zone, right? So, and this is just how I analyze other plays. So it's not necessarily how I'm looking at AMC. I'm not trying to tell anybody to sell anything. I never tell anybody to try and get anybody to buy or sell anything. I'm simply providing thesis and technical analysis as to what's actually going on in the play. I already know somebody's coming in and telling me I'm a shill right now, but that's fine. Aside from that, and I don't use like cycle theory typically on AMC like that guy Astro does, for example, but I do believe that history does tend to repeat itself, especially in plays that are in kind of a bullish kind of channel, until that bullish channel kind of ceases to exist, right? So the similarities that you're looking for here, as far as patterns that we've seen in both moves, we've seen ascending triangles develop in both moves, right? That we broke to the upside. Now we haven't broken this one yet, but you know, a similar type move was developed. So what I think that you'll see until something extraordinary happens, which would be extraordinary to the downside or the upside, is until this channel is broken, we probably continue to have these runs up and runs down until some other force causes that to change. So until then, what I think, you know, a reliable strategy for understanding what the top of the move will look like is to do the extension and then try and correlate. And again, this isn't me saying that you should sell or buy anything. What I'm saying is you should try and correlate it with the trend itself, right? So what that may look like, let me get my path tool here, is if we do complete this bear trap that I talked about the other day, is, you know, you could have this sort of situation where you have this explosive move up, just like we have before. And I mean, depending on the timeline, it's not unrealistic based on the history of the stock to expect this sort of move up. Sorry, I'm going to end my live stream now. I can tell that it's just not working. So sorry. That's so unfortunate. I got a bunch of viewers watching the. Okay. Anyway, so I say all that to say that from a historical perspective, I think you're relatively safe to say that. Let me remove some of these fib lines. That this, let's say non-apes, right? The trading strategy for non-apes that are going to be in this play, if we do get this aggressive move to the upside, just from a technical perspective, the strategy for these non-ape traders, right, swing traders or day traders or anything like that, that enter this and see this sort of crazy move to the upside happening, is they're going to be exiting at these key Fibonacci levels, 1.68, 135, which actually aligns pretty closely with the top of the options chain, which is the $145 strike, which is what actually stopped this out here in the June run. Then you have the 201 level, which is the 2.68. These are going to be significant resistances, right? And the reason that we know this is because, I mean, you can even look at the previous run in June, right? You had this, boom, 4.236 was in 3.618. Not only did you have 4.236 act as a wick, you also had 3.618 be a perfect zone for body candle resistance. And then you broke above and you saw more upside, right? But these zones are going to be where you see some of that sell pressure come in. Now, in a situation where, you know, you have, and what does that look like, right? What does it look like when if MOAS becomes the reality of this play, right? Which is, to be frank, the reason that I'm in the play, because I believe in MOAS. That's why I am trading AMC. That's why I'm buying and holding AMC. And when I say trading, I mean I bought AMC in like April, May area, $10 to $12 range probably is my average. And when I say trading, I mean I'm a macro trader, so I bought here, and I am gonna sit on this thing and until I get what I think the trade is. And I do think that there is a scenario where eventually you could see this sort of break to the upside outside of the channel. And if that were to happen, then this is the sort of scenario where, and I'm not trying to be like spreading like hopium either, right? But this is what it would look like is once maybe let me do a new path. Maybe what looks like, and it might not happen on this run. It might continue to be channeled until this happens. But maybe what this looks like is you break above, right? Things get super overheated. You see a break back down to retest the channel. And maybe you wrestle with the channel for a little while, and then you could see insane price movement because this historical resistance is incredibly strong. This is insane resistance, okay? This is the type of stuff Bitcoin in 2017, Bitcoin in 2013, these insane bull runs that make waves, right? GME in January, that make these huge media waves. Everybody you know is talking about them. That's this level. And this level is hard to sustain. You can't. And it's even harder to break above. But if you do have a cataclysmic event like an incredible short squeeze happen, then obviously, channels can be broken to either side. But what I'm saying is the emotional implications and the amount of FOMO that would come with this sort of break, I think, is something that maybe we've never seen in the market from an emotional, technical perspective. So just to make sure that I'm nailing down all my points here, I'll extend these lines out a little bit further. And obviously, look, these trends can change too, right? Like they can change. And I'm just giving my opinion here. It's not financial advice or anything like that. But you could see even, well, I should have done this. You can see even if we do have a further move to the downside and we break this trend, right? And then maybe we come back up or whatever. What happens is when you're in such a bullish state on a stock is you just can develop a new bull trend, right? And then a channel looks like this instead, maybe. I mean, and then what? What is this? Is this bad? This is revisiting the $30 level, which again, I'm not trying to scare anybody. I'm just saying like this is good, right? This is good for people who are invested in AMC. This is in my opinion, this would be excellent news. This is something that I'm pretty excited about is snap, I got to give myself my fibs back, don't I? This is something that, I mean, all of these levels are significant now, right? So, me, if I'm convicted in a play, when I see downside like this, to be honest with you, I would see it as an opportunity to enter and get it in even more long exposure until something changes with my fundamental analysis that I did back when I entered the play. So that's pretty much the video, I think. That's pretty much my thoughts as far as like the long term. But yeah, I mean, you could see if cycle theory, etc., is the reality. Oh, actually, you know what? Before I do that, let me readjust this to make it look more like what it actually is right now. Because we could be having a bear trap here. It's completely realistic. It's not something that I would take off the table at all. I don't think anybody. I mean, this is a legitimate pattern developing here. But anyway, I mean, you could see literally in my scenario that bear trap, and then you could see similar to before, run down, trade, slowly work our way back up, and then boom, maybe or run down, boom, right? So, sorry, it's kind of ugly at the end there, but you get the idea. And then the way that you would be able to set expectations for yourself and know what the crazy breaks are and the things that are oversold, and just so that you know what to expect going forward. I mean, this is not me saying you should sell or anything like that. I'm just saying like it's important. We know that thus far this play is respecting Fibonacci. We know that's true, right? So look, if you get a move from here to this, let's say you get it from here to this $197 level, right? Then once you do that, you would measure from the bottom to 197, Let's just call it 200. And then, you know, maybe you have a move down here, boom, and then boom, there are your new Fibonacci levels. That's what I think that this play has because of the retail interest, because people are so interested in the stock long term. So many holders in the narrative surrounding the stock, right? The stock is on the news all day, every day. Everybody is aware of what's going on with it, or at least the retail interests. I think that that's overall like a pretty conservative way to look at the stock, in my opinion. That's my opinion, but and that's why I'm in the trade. So yeah. Anyway, if you guys enjoyed the video, I appreciate you stopping by, watching, and if you have any questions or anything like that, feel free to share them in the comments. I appreciate all the love and support that I've gotten so far on the channel. It's really crazy and unbelievable. I can't believe how much support I've gotten so far. So if you enjoy the content, make sure you drop a like, subscribe, and turn on post notifications. And yeah, until next time, I'm actually going to go record another video right now for the bearish scenario. So make sure you check that out as well. I might post them at the same time or something. All right, take it easy. Thank you.